Banks starting to panic as defaults are on the rise. Hey everybody, Scott Walters, buckle up, strap in. I got a hard-hitting, pull no punches, no sugarcoating it, no rainbows, no sunshine. I'm just going to give it to you and give it to you straight. We got a good one to unpackage today. Buckle up, strap in, hold on to your hats and your glasses as we blow the lid off the U.S. housing market. Why, you ask? Well, of course, I'm going to tell you, because everything hinges on it. If and when we lose it, we're going to lose everything. Booms and busts, we've always had them, and I'm pretty sure, if memory serves me correctly, we just went through the biggest boom ever witnessed in history with the zero organic growth, market manipulation, overstimulating the biggest asset class in the world. Anybody wanting to minimize the severity of that is clearly drinking the Kool-Aid, doing the same thing over, expecting a different result. What's that the definition of? You guessed it, insanity. Doing the same thing over, expecting a different result. Everybody drank the Kool-Aid in stimulus, especially and none other than the banks. The banks were writing loans. The rates were low. They were incentivized to push, stimulate this economy. It was all built on quicksand, and now we have a runaway inflation to battle. Friends, a quick break from the show to bring you today's video sponsor, Noble Gold. I would never suggest anybody do anything that I'm not doing or willing to do myself. I own gold, and I believe you should as well. Let's hear why. The second largest and third largest bank runs in history happened last month. The government is taking steps to guarantee all deposits. That means more money printing. Thousands have approached Noble Gold Investments to secure their wealth with gold. Gold is the most stable asset outside of government control. Hurry and go to noblegoldinvestments.com to secure your wealth. Bag a free 5-ounce American the Beautiful coin if you qualify. Again, to Noble Gold for sponsoring today's video. Always be careful when investing. There's always going to be risk. Now, let's get back to today's video. Interest rate environment, a two-headed monster. Leadership doesn't know how to put it back in its cage. It's a runaway train. It's left the station, and it's not coming back, my friends. Buckle up and strap in. We have some potential serious waters to swim through now, and it appears that they might be shark infested. I'm going to share with you today what's currently being generated from the banks and companies assembling themselves for the onslaught, the potential, the anticipated and now almost guaranteed onslaught of distressed homes, distressed upside down owners and defaulting. We've already heard people are defaulting on their loans, getting 30, 60, 90 days behind. And as soon as this gets to epidemic levels and overwhelms the bank, they're going to be requesting what you ask. Of course, I'm going to tell you, if you didn't already say it and you're under your breath yourself or out loud, bailouts. We need a bailout. We need a bailout. There's already so many bailout programs. I'm going to expose some more hidden bailout programs. You heard about these here in wacky California, California Homes for All. That's a new program. Here's some money. Go out, and they're doing their best to stimulate the housing market. This happened in the previous bubble, friends. This happened in the previous bubble. They did things like this. We've heard about the loan forbearances or ARM mortgages. And sound familiar? Rate buy downs and low interest rates. It's the same exact thing, just a different version of it. It's the warning signs. It's the crash knocking at the door. Now you and me, we all have to decide what level of a downturn is coming. Because anybody that thinks there's no downturn knocking on the door, we're seeing it. I say it, I find myself saying this almost every single show that we do here. When you get reports that the majority of Americans now are living paycheck to paycheck. I was watching another channel recently, and they showed how now it's mainly the service sector who's hiring, no white-collar wage-earning jobs. Those are the ones that are getting attacked right now in the job losses. You can get a job flipping burgers at In-N-Out or one of these chains. And now they're offering, instead of bi-weekly paychecks, every week. Weekly paychecks here, come flip burgers for. This is not a good sign. But the one thing that the U.S. savings rate now at an all-time low, with the U.S. debt at an all-time high, people living paycheck to paycheck, majority of Americans with less than $500 in their savings account, they're running on fumes. This is attacking the lower and middle class and incentivizing the rich. We're bailing out the rich is what we're doing here. Insane. So the banks now are targeting they're trying to, I mean, as I read between the lines and look between the cracks of these emails, I'm seeing solicitations now to any licensed realtor out there, because I know you're running on fumes if you drank the Kool-Aid. You're desperate. It's desperation time, and you're seeing these emails from the bank saying, become trained to sell the distressed homes that are now spiking. Get your training now, because these non-paying mortgages will end up into foreclosures, and we're going to need agents, boots on the ground, out there to handle the onslaught of foreclosures that are now coming. They're basically saying, buckle up, strap in, they're coming. So whether these emails are designed to get an agent desperate for work to pay for that onboarding, if you're with a big brokerage, you can talk to your manager, and I'm sure they'll have some REO programs for you to participate in if you want to become trained on how to do short sales, REOs, and foreclosures. I'm sure your brokerage has that. But this is the realities. Companies are out there right now. In the last crash, companies assembled, approached the banks and said, we have a pool of trained agents trained to handle your distressed properties. And they were getting in between and middlemaning that. So without further ado, let's jump over to today's email. Blow the lid off this one, then we'll meet back here to wrap it up. Let's get started. All right, friends, here's our email that showed up in our corporate email account. Bank property agent application. Please let us know if you have any interest in taking on bank listings. We've seen a serious uptick in owners falling behind on their payments, and we'd like to get everyone trained right away. We are seeing large spikes in homeowner defaults at a time when we expected them to drop. They haven't dropped. They've increased. Even as forbearance numbers are on the decline, 90 and 60 plus defaults are at record levels. What this means to you as an agent, banks will soon be foreclosing and taking these homes back. Even the strongest seller markets will be affected. It will soon become much harder for agents to make consistent commissions. Don't be late on this downturn. P.S. We have seen the largest spike in 60-day defaults that we've ever seen. You will be getting information you need about Fannie Mae, Freddie Mac, JP Morgan Chase, HUD, US Bank, BNY, Selene, and hedge funds. Don't ask to receive it before or after. Be on the meeting. All right, I think we get it. Let's get back to the studio so we can wrap this one up. All right, friends, welcome back. So there you go. Those are the types of emails now. You see, in the past, in the bubble a year ago, before interest rate hikes, the only emails you saw were buy now, buy now, buy now. We were all short on sellers, heavy on buyers. Now that equilibrium is starting to flip. Agents are now in desperation mode. Now, the truth is usually somewhere in the middle. As we looked at that email today, it's clearly emails targeting agents to onboard them and train them. This will be a need at some point. It's coming. I believe a lot of opportunists are out there preying on people's emotions, possibly desperate realtors right now. They don't want to go back to dealing blackjack at the casino. They want to stay in the business. But they drank that Kool-Aid. Now it's all evaporating on them. That's the challenging part. You never want a realtor. We're shaped in their clients. If they drank the Kool-Aid too and their only source of income was commissions from buying and selling homes, and they got full of themselves and drank the Kool-Aid, and I know many of you out there right now like, Scott, my area is still doing great. Properties are still going off the, mine is too. Mine is too. If you come on the market properly, you don't get greedy, you'll probably go off the market in or around its fair market value in certain areas. But there's certain areas right now. I talk to agents all over the nation for you guys as I put you guys together with people. Scott, it's crickets out here. It's I had an open house, 0 showing. So don't think just because your area might be behaving halfway decent or decent at the moment, it can't join the party. I've always said, real estate's local. All areas behave differently. Some will be the last to get hit, the first to rebound. You might be recession insulated, but you're not recession proof. In the last great recession, everybody got touched. Some just got touched harder. Some got touched last, some climbed out first. And like I was about to say, or if I hadn't already at the beginning, before we cut to the email, You get to decide what level of a downturn is coming. No downturn risk, Scott, here. It's rainbows and sunshine. I'm over here with the rainbow. Okay, great. Let us know how it works out. Jump in the comments and let us know in a year from now what you're seeing in your area. Number 2, the correction phase. Well, most economists would, and myself agree, myself included, because I monitor the health and the fitness of the biggest asset class in the world, the U.S. housing market, the best temperature check we can get. If we lose it, we're going to lose everything. I monitor that one. I see we're in the correction phase. You see the national average now getting dragged down. We clearly identified the top of the bubble. It's not growing anymore. So that indicates correctionary level of a downturn is now being ushered in. Intentionally too, not an unfortunate byproduct of inflation. No, it's market manipulation again, but the opposite, the rug pull. So if we can't stop it there, then we hit the recessionary level of a downturn, which I anticipate probably within a year from now, if not by the end of this year. Official recession announced, contagion sweeps the markets and your area gets touched. But if we can't touch it there, and that in fact happens in this bigger bubble than ever witnessed in history, we hit the last and final stage of a real estate correction, the depressionary level of a downturn. And certain areas are going to identify themselves as ultra exposed. You can hang on to hope that some areas will weather the storm a little better. Like I said, some will get hit last, some will rebound first, some will get hit harder, some won't. We'll monitor that as we move this thing forward, but I'm going to let you know I'm going to be here to blow the lid off it every step of the way, because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give a video a like, subscribe to the channel, leave a comment below. I'd love to hear from you. Social media links in the description of this video if you'd like to contact me there, along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the nation ready to assist you. It'd be our honor and our privilege to do so. Email in the description for you as well. Also, if you're watching from your television set today and you enjoyed this video, I know you're going to love the next video. As always, thank you for your time. Please go make a count today. I'll see you on the next video.